Good morning and welcome to Forex in Four. Today is Friday, September 23rd, 2011. Okay, so we've watching the selling continue a little bit here, but it looks to be slowing down just a little bit. And we're taking a look here at the euro on the 30-minute chart, and you can see just this massive sell-off that's happened since the announcement of Operation Twist. Thank you, Bernanke. And I went over all that yesterday, but wow, pretty easy move, right? 138 right down to 134. Okay, we bounced. Looks like we put in a short-term double top here at around, I don't know, say 135.50 area. Okay, now we're selling off a little bit. There's not a ton of news out there today, and I think the markets are hoping to sort of just rest a little bit and make sure that there's no further selling that comes in great pressure. But the dollar sold off a little bit overnight. Euro, pound, Aussie, all these risk assets got a little bit of a bounce. The G20 came out with a statement saying that they're going to vow to tackle the renewed global risks, and it's sort of like this just blanket generic statement that we're going to cooperate together and all work to bail out of this, and it really amounts to a whole lot of nothing. So you can see that the little bounce that we got there was short-lived, and now it looks like we're moving back down towards the 134 area here on euro. And you can see, if we look at Aussie, we know that Aussie and euro are highly correlated, but you can see a similar move happening there as well. And then lastly, I want to show you the pound. All right, the pound's got the same deal going on, although the pound's actually bounced up just a little bit higher. They actually had mortgage approvals, which came in higher than expected. So, all is not lost in the UK, and the UK sort of gets lost in this whole shuffle because of what's going on with the eurozone. But we talked about it last week with the meeting, the minutes from the meeting, and there's some thought that the UK economy, while it's slowing, all right, it's not totally dead. They're not facing any of the headwinds that we're facing here in the US or in Europe. So right now it's really just monetary policy, which everyone's watching there. So I don't think the UK is in that bad a shape. And if I had to say, if you guys tell me you got to buy pound or you got to buy euro, I'm probably looking to buy pound at this point. All right, but one of the things that's been happening is that with the dollar strength and the risk aversion in the market, all right, we've been getting considerable Japanese yen strength, and I just want to show you here euro yen. Okay, you can see the euro made the same move. All right, but yesterday it's this 102.50 area just ahead of 102. All right, you'll see here. I'm going to go back to a monthly chart just so you can see. All right, we're approaching close to all-time lows here. All right, so that's down in the 90 area. We're over here at about 100, and of course this happened back in the year 2000. So that was quite some time ago. But in recent history, all right, we are at new lows in the last, I don't know, say 10 years or so. And I've got mouse problems here, so let me get this sorted out. Perfect. Okay, so that's euro yen, and we can look at dollar yen. Now dollar yen's interesting, and one of the reasons I want to take a look at dollar yen is because we're still sitting up above 76 area. All right, and that's the area where if we start to break that down, then I think the Bank of Japan is going to start to get a little bit nervous about the strength of the yen, and that's when the intervention talk comes in. Now, they started talking intervention earlier in this week, but what's going on in the eurozone is it's such a potential, well, let's just call it another tsunami, if you will, an economic tidal wave, that I don't think Japan wants to get in front of this thing and intervene just yet. I mean, if the situation starts to stabilize a little bit, if it looks like there's light at the end of the tunnel, then perhaps they'd step in. But it doesn't make a whole ton of sense to intervene in something like euro yen or dollar yen here if the market's telling it that it wants to go the other way. And especially if the problems in the euro pick up, that now what are the problems in the euro we know about? It's the Greek debt crisis. All right, Greece is still having problems meeting the austerity measures. Now there's talk that the finance minister is starting to capitulate a little bit to the side of the people and say, hey, wait a second, maybe dropping out of the eurozone's not such a bad idea. So it's a very tenuous situation over there, which we still don't have a result for. And some guy at the from the EU basically just came out and said, well, yeah, we'll take monetary action if the economics get a lot weaker. Well, sitting around waiting for the data doesn't really make sense at this point, considering that the major problem here is what's going on in Greece, and then the potential contagion. All right, everybody's talking about Italy. All right, so they need to act sooner than later, and all this waiting is what's gotten them in this trouble to begin with. So we're watching dollar yen here at 76 levels, and if it gets much lower, then we could see some potential intervention from Bank of Japan. All right, just want to show you gold. Gold's also selling off as well. All right, you can see gold pulling back to, wow, that's a 1695 handle. I'd run a Fibonacci on this, but to be honest with you, the uptrend has been so long for gold that I think we have quite a ways to go until we get back to that 38.2% retracement, which I believe is around 1600 somewhere. But just know that gold's off. Okay, you can see oil selling as well. Global slowdown, that makes sense. All right, we had moving down towards 2011 lows. All right, back towards the 75 level, which, again, I know that these markets are highly correlated. I'll just show you S&P while we're looking at it. All right, S&P also pulling back. All right, we're getting back down to the area where, we had, this major selling. And if we get down here, we can't hold 1100, then perhaps there's a little bit more room to go to the downside. So perhaps we're looking at a move down to 1000, say, or thereabouts. So that would be, a pretty big move, another 9% haircut on S&P. All right, but getting back to the oil, I just don't understand the argument that, for oil, just because it's highly correlated to S&P, and, you have this risk-taking, risk themes where it's risk on, so you buy stocks, you buy oil, you buy things, the economies are growing, everything's great. I remember a time when oil used to trade opposite to the S&P because the market theme was that higher oil prices were actually going to inhibit growth. Okay, and that wasn't that long ago. That was probably back in, gosh, I got to say about 2004 or 2003, back when I was trading equities, and that used to be a major play of mine. That was selling oil and buying S&Ps, all right, or it was selling S&Ps, buying oil. All right, and I can tell you that the one day that correlation broke down wasn't a pretty day for me. Okay, that was a big losing day. But we can have a period where stocks can go up with oil prices going down. All right, now we talk about global growth, and that's what creates this oil demand. Well, I'm still in the camp that it's Fed easy money, all right, that creates higher oil prices and not demand. All right, and that if we had higher interest rates, oil could be down at say $40, right, and we could still have stock growth happening because now the cost to do business is a lot cheaper. Okay, that's savings that businesses have that they can use to hire employees and things like that. All right, you can't borrow money as cheaply with higher interest rates, but how many of these corporations need to borrow money? All we hear about is the money that they've got stashed on the sidelines. All right, the money that they've got overseas that they don't want to bring back because they're afraid of the tax that's going to get hammered on it. All right, you wipe that out. Okay, who cares about what the lending is? All right, let people spend money that they have. And I'm telling you, we've been going down this route of we got to keep rates low. We got to keep rates low to try and encourage this inflation, and it's not working. All right, all it's doing is creating a crisis of confidence. All right, you can tell people here it's free money, and people don't want to take it because even if it's free, they know that they have to pay it back at some point. All right, and if they lose their job, if their home goes further underwater, all right, how are they going to pay this back? They can't. People realize, well, wait a second, I don't want to get into a situation where I've taken on too much debt. So, all this stuff that Bernanke's doing, all this tinkering with monetary policy, isn't helping a darn thing. All right, I think what you need to do is if you want to get things moving, start raising interest rates. All right, I know that everyone's going to say, whoa, wait a second, what are you talking about? You start raising interest rates, now people are going to say, you know what, I better borrow money now because the cost of money is going up. All right, so maybe now they borrow the money and then they spend it to do stuff. All right, but right now nobody wants to touch it because all they're thinking is that it's just going to get cheaper and cheaper and cheaper, and I don't need to borrow now to do anything. All right, I can do that later. And, we've got this stagnation going on in the economy. We're slowly declining here. We know about the stuff going on in Washington. I don't think it's ever been more divided. But and you know, these guys aren't getting anything done. So it's kind of a mess going on here, but Friday selling doesn't surprise me, especially going into the weekend and with this Greece uncertainty. All right, it would be a you know, starting to get long right here doesn't make a whole ton of sense, especially if you know, you find out on Sunday that, oh, by the way, Greece decided to opt out of the Eurozone, right? And you just bought in here on a Friday. You know, you're going to take a pretty hefty loss come Monday when the market reopens, say. So I don't think there's going to be any will to step in right here. All right, but maybe over the weekend, all right, Greece does come out and say something, and they do sort of come up with a resolution or just a temporary stopgap or whatever, and now people start to put their toe back in the market. All right, and then you know, boom, that's how you start to build a bottom. You build a base. All right, perhaps we get a double bottom going here, and you know, we move higher from there. So you know, that's really what we're looking at. We know that all these markets are correlated in one way or the other, and it's just a question of finding that which is going to make sense, all right, in the places where that are important to look, and then all the ancillary players come along for the ride. So when I say that, I mean, like, you know, the Canadian dollar, okay, and I mean the you know, the New Zealand dollar as well. So you know, that's really what we're looking at. Wow, that's under 77. That's a low number. So anyway, that's what I'm looking at today, folks. So you know, if you're gonna try and step in here, do it in small fashion. You know, put your big toe in, maybe even the little toe, but not the whole foot, and you know, wait it out till Monday to see what's happening. So that's what I've got for today. Good weekend to all, and good trading to all.